All right, folks, welcome back. So, another week. It's just flying by. I feel like I just started on Monday and it's already done. But we have had a rather volatile week, and man, was that a welcome change to how it's been for months now. So, I'm going to give you a light overview on dollar and euro, and then we'll dig into some teachings with the index futures. Teaching I put on YouTube last night, and I got a lot of feedback from the members here saying that it actually helped them draw things together and how everything can be simplified based on sound logic, what you're trying to do, trying not to incorporate everything, and making it as simple as possible. Specific times of the day, specific criteria, having a bias. What do you think is likely to happen in price? Is it going up to go down? Is it going down to go up first? Then going in and looking for a specific pattern. Now, I want you to think about this before I go further in this video. Think about what I'm teaching in the fair value gap in that model on my YouTube channel. That could easily be replaced with an order block, a breaker, a institutional order flow entry drill. Everything is interchangeable. It's a matter of what you're looking for. As a personal study, go in and look and see if the PD arrays that you like, that you're growing into trusting more, because maybe you don't like the fair value gap. I don't know why you wouldn't, but maybe it's the case for you. Maybe you like the optimal trade entry just by itself. Maybe you like the order block. Maybe you like a bearish breaker. Whatever it is, you're going to still see that pattern. It's there. Okay, you'll find it. That's the wonderful thing for me, is that all of you are going to have slightly different models, but you'll all have the ability to trade and not have the same entry pattern or the same logic from beginning to end, and you all still can be profitable. Think about it. It's amazing to think about how many ways you can skin this cat. Just food for thought. All right, so we're looking at the dollar index. This is a daily chart. Wednesday, when I spoke with you guys, I told you I was looking for lower prices on dollar to continue lower, and we dug into the area in here. My focus is down here now. If we take out this low, we have the remaining balance of this low to this candle's high. So that little bit of a imbalance still there. And then obviously the liquidity here. All right, euro dollar daily chart. Yes, there was no hourly chart or 15-minute time frame analysis because I said I'm going to try to get through the videos for teaching purposes. All right, so the dollar obviously has broken down lower, and I drew your attention to this area up here and said that we were going to look for higher prices on euro, and we got that. Okay, I wasn't going back and forth two sides of the marketplace. I said dollar lower, euro higher. And the very next day we have this. So what I'm showing here is the high and the close of this candle. Those lines right there, you'll see that when we do drop down into a lower time frame for euro. Relative equal highs for euro there, and then the imbalance here in the form of a SIBI. All right, there's those levels here, and we had ECB news come out on Thursday. It caused a lot of fireworks here. Fair value gap there. Trades down into the order block. Rallies. The annotations out here, we'll see what this is as I go into the lower time frames. But think about what we've seen so far for this week. We had Monday's low all the way up to the high formed on Friday. Now, when you're looking at the weekly range and it's bullish, what do we anticipate happening on Thursday and Friday? The weekly high to form. But if we trade higher on Friday, then we can expect what? TGIF. TGIF setup, which is, thank God it's Friday. I know I'm not trying to make you all Christian or believers in God. It's just a cute little name I've used. The retracement of 20 to 30% of the weekly range. The way you get this level is just simply put 0.2 or 0.3 on your Fibonacci settings on the levels. So when you have the low and the high, it trades right down into 20% retracement. That's the minimum threshold for TGIF. So it could likely retrace back that much. And then, or all the way down to 30%. And if it's really wild, it could trade all the way back down to 50%. But I don't like using that level. Not at least for TGIF, I don't. I like these levels here. So we're going to zoom in here and take a closer look at all that business. But just remember that 20% of the weekly range is going to be that level that's right there. All right, so the euro dollar 15-minute time frame has a fair value gap here. That's extended out to there. Relative equal highs. We run above it, and then we break down. What does it create there? Institutional order flow entry drill, because it's a balanced price range over here and here. We don't need the model that's being shown on YouTube. I'm not trying to diminish its effectiveness. I'm just saying this right here, that's enough. Get short, target the fair value gap, which is also overlapping with the 20% of the weekly range level. If you extend that out in time, look at the bodies respecting that. Beautiful. Into the fair value gap on the hourly chart and 15-minute time frame. But let's take a deeper dive into this area right here. The market rallies above relative equal highs, and we have a short-term low here. It breaks below that. Does it close below it and have a meaningful decline below that swing low? Yes. Go through all of this, and what do you see? Do you see a fair value gap? Right here, and then we have one up here. So if you have two of them, what did I teach? On YouTube, you can go short on here, but anticipate at least allowing the market to trade that far. Hear what I just said there? I gave them just enough not to hurt them, but I'm teaching you that's where you enter. Now you can do two stages of entry. You can scale in, you can do your largest portion here, and then a smaller portion here. That sets up the runner. So that way, if you're going to take partials, partials are going to come off the first orders you put in, first in, first out. The smaller order that you would typically leave on for a runner. In other words, that last little piece in case you want to just keep it on there and see if it gets a little bit more juice out of that lemon and goes farther than you think it's going to go. You can use that idea there. Okay. Or you can reverse it, obviously. You can do a smaller position here and then hope to get in on a larger portion up there. And then when you take a partial, it's going to be from the smaller portion first. Because first in, first out in the US. So we have a nice sell-off there. Breaks down. And then careens below the low. Retracement back into the SIBI. Back into high, low, higher high. Breaker. Breaker. Sell-off. SIBI. Trades up into it, sells off. Sell side liquidity, fair value gap, TGIF 20%, a lot of confluence there. There's your euro dollar. Just a beautiful setup based on time, day of week, and narrative. That level is where if I was going to hold a portion on, 80% of the trade would come off there because it could retrace, and we've had a lot of volatility. But that level, 80% of my trade would be completely closed. I did not, for disclosure, I did not trade euro dollar. I'm having a lot of fun trading the NASDAQ. I'll be honest with you, I feel nostalgic going through all that again. And I wish, well, let me rephrase that. I'm glad the volatility that's happening right now was not available to me back in the 90s, because I probably would have blown up to the point where it would have been bad because it was not anywhere as volatile back then that it is now. So maybe I wouldn't have ever become ICT. Think about that. All right, so the E-mini NASDAQ 100 futures March delivery contract for 2022. All right, so we're looking at a couple things in here, and I want to spend a couple minutes outlining this. First of all, we are in a very, very hard area to trade because we had this low taken out after creating the SIBI, trades up into it, institutional order flow entry drill, sell off, attack the sell side liquidity. We already went through all that, okay? So we went below the low here, and then we're retracing back inside of what? This high to that low. So we're trading back up into a premium. This is the level I mentioned that we were going to study. It went through that, and a lot of stocks got rocked, like Facebook, their metaverse crap, and the fact that they took down the user group for all the truckers that are making a stand, which I think is awesome. But it also comes with a great deal of concern because your stuff isn't going to be getting to you in the stores. And if it starts catching momentum in the US, hey, I told you, get ready, get stocked up. If you don't want to do it, that's your business, but you need to be doing it. But a lot of stocks got smashed. Like Facebook went down, I think, in one tick yesterday's opening, over $100 down or something to that effect. So, yeah, there's a lot of fluff in where these averages are. And at some point, it's going to have to, come home to roost. So if you have only a few stocks holding up these averages, when they finally give way, this could be violent. Like it could be very fast, like so fast. If you're caught offside, you could be really smashed, real good. So I'm trying to be very nimble intraday as I'm trading this market here, but I'm having a lot of fun with it. The volume imbalance is the first level I mentioned while we were trading down here, and traded up into it, and then we had the following day had some follow through, and the next day we had all this here, okay, and then we smacked the indices lower. As soon as it closed here, it smashed down after the session closed for the day. It was actually trading aggressively lower, and that's why you had this weird separation here. But if you were watching it live, you can actually see how it declined. And then we had another roll lower, closing in the buy side imbalance, sell side inefficiency. And I mentioned this volume imbalance right there. I said if we got below it, came back up and hit it as resistance, man, that could be an amazing selling opportunity. And I'm still hunting that. I'm waiting to see if we can get that. And in fact, I was watching it today thinking it could happen. It could, but it didn't have the setup I was looking for. And I'll show you some executions I did. But this candle's open, which is the up close prior to this move here. That's your bearish order block. This wick. Now you're probably saying, man, this is a lot of things for your chart, ICT. I know, but it'll make sense when we get in the lower time frame. This tail or wick, I have the consequent encroachment level, which is a dashed line. The thick, well, maybe not so thick, but the solid red line, that's the bearish order block, okay? And the two blue lines you'll see in the lower time frame charts are the volume imbalance, premium high and low. And the volume imbalance down here in that shaded rectangle. So I'm going to zoom into this area here and get you a closer view of what's going on. Here's the volume imbalance, those levels in the blue, the bearish order block, okay? And then this candle here, February 1st, consequent encroachment level that's being extended out there, okay? All right, so in the hourly chart, bearish order block, we trade up into it, hit it, smack it right there. Look how much time the market stayed inside that volume imbalance. Yes, we left it almost traded down to the volume imbalance down here. Came back up. Look what level it hit. That's consequent encroachment on that daily candle's wick or tail. Consolidated, dropped down to what? The discount low of the volume imbalance on the daily chart. Rallied back up to what? The consequent encroachment of that candle's tail. Then it sells off again. Where's it go? To the daily volume imbalance I mentioned to watch. Then it rallies, takes out a swing high, breaks market structure, trades back down into what? Discount into the volume imbalance. Then sends it higher to where? Consequent encroachment on that daily candle's wick. Then it sells off again, back into the imbalance. On a 15-minute time frame, again, watch how it reacts on these levels. Look at the bodies there. Rallies up to the bearish order block. Sells off. Consolidates around the consequent encroachment of that wick. Works that level again. Sells off. Discount low of the volume imbalance. Rallies back up to the premium high. Look at the beautiful reaction there. Sells off. Retraces for optimal trade entry. Where are the bodies attracted to? Consequent encroachment of that wick on the daily chart. Sells off. Fair value gap. Trades up into it. Pills it. Sells off. SIBI. Rebalance. Sells off. Just fell short of touching it there. I was watching that live. And there's a massive repricing that took place here. Right back to what level? Consequent encroachment of that daily candle's wick. Sells off. Then picks up more liquidity at what? The discount low of that volume imbalance on the daily chart. And it rallies back up to what? Consequent encroachment of that candle wick. Sells off. Consolidates and works around what level? Discount low of the volume imbalance. Sells off. Trades into order block. Rebounds into a imbalance and takes out short-term high. And then aggressively sells into the volume imbalance. Rallies, breaks market structure, trades back down to a discount after breaking market structure, and then rallies right back up to that candle's consequent encroachment. Now, notice these levels are giving real insight versus classic support and resistance. Find an old high, find an old low, and hope it repeats. It's totally different. So these are levels I was watching all week. And I'm going to take you down into a 5-minute chart. Here's where the market dove down into and below the imbalance, and then rallied above this short-term high. There's a break above this short-term high, causing what? Market structure change to bullish. Trades back down into what? Fair value gap. See that? Trades down into it. Is it likely to completely close in? No. Why? Well, we have that imbalance, the blue shaded area. It touches the low of that. Also, one single pass down, one single pass up. Balanced price range or island reversal. Don't expect it to completely close in. Then rallies again. Pumps it in here, 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 here. Takes out this high. And then deep retracing back down into the imbalance. Rallies one more time. Imbalance here. Halfway of this price leg here. Everything can be reversed. Okay, you're looking at market structure on both sides of the continuum, the sell side and the buy side. Rebalances in here a couple different times. Rallies again. BISI. Institutional order flow, entry drill. Rallies. Comes back down, finds some support. Rallies again into that consequent encroachment of the daily candle's wick. Then sells off. Now, I was watching to see if it could get above that. Here it is, this old high back here. And it got real close to it, but it gave up the ghost and went lower. From this low to this high, you're in balance here. and it trades down to a discount. So order block, discount, relative range is here. On the 1 minute chart on NASDAQ today at around the 10 o'clock hour, we had our buy side liquidity pool here. So starting the day at 8:30, right there, look to the left. What do you see? There's your first swing high. Because this is so close, I like that. Okay. So extend it out in time. Rallies higher. Creates another little run higher here. Then breaks lower. Retraces back in. What's occurring? Swing low taken. Is there displacement? Yes. But now there's two gaps. Here and here. So what did I teach you? Well, if you're watching just a YouTube channel, it means you can sell short here, but expect the market to trade up into that area and allow for your stop to absorb that. I'm teaching you as a mentorship student here, you want to sell short rate in there. And you can do a two-stage entry. You can scale in a little bit here or wait for it to get in there and hit that. Now, the problem with this is you might miss it. And once it runs away, it's over. Can't chase it. And you have institutional overflow entry drill here. Sells off. And attacks the sell side below the low here. The imbalance and into the order block there. By trading there. But look closer also. There's a lot of confirmation with this being a false break above here, just for a buy side liquidity pool raid. Look what NASDAQ is doing. Higher high. Even the S&P, lower. Dow, lower. So we have an index divergence between the three averages, confirming this is just a stop hunt. And you can trust this here as an optimal trade entry. Wow. I'm being facetious. All right, 15-minute time frame. I'll show you some examples of what I was working with and the levels. Selling short, you already saw that, and I think I showed that on the YouTube video. Yeah, but you don't see the details as to why. Okay, and the covering here. Okay, so short, two partials. Okay, and the limit order actually getting filled. Then, after coming away from the consequent encroachment level, we're on the discount low of that old volume imbalance on the daily chart. So that's going to be a key level. I'm expecting trades to form around these levels. Well, what do you have here? Sells off. We have an imbalance. Go short. Buy it back here. Rallies back up to what? Discount low, the volume imbalance. Sells off here. Limit order taken here for, I was just short of 100 handles because I didn't want to get too rich with this order block here. So I got real close to it and that was enough. And when I woke up this morning, oh man, I saw it all the way down here. I'm like, oh, I wanted to get something down below that. I did. I really wanted to, but I was like, yeah, I don't trust it. You know, it's so volatile. Like, it's so volatile. It can change gears. It can rip and tear direction, a couple hundred handles. And then all of a sudden, turn around and roll twice as fast the other direction. Like, it is so fun, but it's dangerous. So don't let me entice you into thinking you should be out here trading with this with real money, okay? Practice in a demo and get some experience because this type of volatility is amazing. Now, admittedly, I'm showing you some advanced things here. Okay, I remember saying that in the beginning of this teachings, but I'm showing you the levels and the things I teach you to look for. And why am I looking at these levels? Because we are in a weird consolidation. So I'm leaning on specifics that if I'm to assume that these algorithms that are in the marketplace are still being utilized in this market, which obviously I have my tongue in cheek, they are, then they're going to repeat these similar things. Okay, so you can clearly see it here. Like, this is the logic, and this is the stuff that isn't in books. But it frames trades. It helps me find trades. And you guys watched me reset the account the other day after I ran it up to like $600 and some thousand. Demo. Okay. But the idea of not being able to find setups or executing, I'm constantly proving that that's not true. I can find them; it's there all the time. But with $10,000, and now it's at 19,365. So 93.6% in basically 2 trading days with 3 trades. That's them over here. Okay, selling up here, and the first partial and the limit order getting filled. Selling short, buying it back. Selling short, buying it back. Here's the details. Okay, as you can see there. So, what's the takeaway from this? If you know how to trade and you know what you're looking for, okay, and I'm using this idea down here with the students in here that have asked me, hey, look, would you ever trade with like NinjaTrader? I don't want to trade with NinjaTrader because of one reason. You can mess around with taking a trade execution out or fix it. I don't like that because that to me sounds just like the rented MT4 stuff, which I never participated in, and I don't want my name associated. I took great strides to get away from MT4 and used what everybody else recommended, and here we are in TradingView. If they report that they can scam this, okay, I'm going to have to completely leave it too. Like, I'm not going to be in a position where anybody can say, oh yeah, he's doing this and he's doing that. It's right here in front of you, okay? I'm looking at this with the logic that, okay, NinjaTrader and the discount brokers, apparently the brokers that NinjaTrader works with allows the margin of $1,000 for one mini contract of NASDAQ. For one contract to have $1,000 in this environment is absolutely insane. Like, it's insane. But I'll play that game. So when I set the account to 10,000, hypothetical demo account, what I'm watching when I'm looking at these moves, I'm waiting for the real setup to form. And then once I get a small little 5-second or 15-second fair value gap or institutional order flow entry drill, I'm entering there. But I don't think the volatility is going to stay like this. At some point it's going to smooth out. But we'll probably have to see some kind of a next leg collapse or something like that. And then it'll start to slow down again. But even before this type of volatility, 25 to 50 handles a week is still something that's always been possible with this one. It's easy. And you can get 25 handles a week in the E-mini S&P. You don't need a whole lot to do very well. And you let the heavy lifting be done by the money management side. So as you build up the equity, it allows you to carry more contracts. And then as you carry more contracts, the results actually escalate and compound exponentially. And then it becomes real easy to move 6 figures around. But you have to let it grow and submit to that time process and not be in a rush about doing it. But anyway, hopefully you guys got something out of this one. A little bit relaxed teaching session today. Covered a bunch of stuff. Maybe it seems a little disconnected for you. That's okay. I'll draw all these pieces together as we go through. Okay, but I'm just going to show you again. This is what it looks like when you're using it. So we're in that stage of the mentorship where this is where the rubber meets the road. I've taught you lots of concepts. I've taught you lots of concepts that lend well with each other, and some of them are independent. Now, what do you do with it? Where does it take you? And in a lot of ways, this is where the fun really kicks in. And the analysis, I'll keep it brief, as brief as I possibly can. And then we'll go through these lessons and final topics, and then we can relax as a community and just kick back and exchange ideas. And you got questions, I'll answer it in the forum. Last bit of business, and we're closing this one. I have a couple people asking me, what videos are going to be left on the server after June 1st? None. There will not be any hosting by me for the videos because it's too expensive. And I had other people, listen to me folks, Okay, if you're not really paying attention, stop what you're doing and listen, because this is really important. I'm going to hammer this in every video. So that way no one can say, I didn't know, because I have people saying that about charter membership. I didn't know the payment note had to be different. It's in the form. It tells you very plainly that this is what it's supposed to say. A lot of you are coming forward and saying, hey, look, can we just pay a small fee collectively and cover the cost? I said, I do not want to charge money anymore. I don't want the problem, the burden. I don't want it. Okay, I don't want that. I appreciate the willingness that you wouldn't do that. Those that have mentioned it. I don't want to do it. Okay, I don't. It means I have to keep people helping me, that I have to be concerned about whether they got what they paid for, if their access is still. I don't want that. I don't want it. Okay, it's just a headache. It's a job. I don't want it. I don't need to do videos in perpetuity. I can teach you with a chart, a PDF, a text, comment, an instruction, or post on my own form. Okay, it's going to make it easier to teach that way and faster. It'll be easy for me to drop it into the forum and you can see it right away, and you don't have to listen to these long-winded videos that take a lot of time, lots of time. And it's expensive. You think it's cheap. Okay, a lot of trolls are complaining, oh yeah, ICT is rich, but he doesn't want to pay for the server. I have too many people here. There's too many people in this and so many different user groups. So when I put a video up, there's 25 versions of that same video going up. That takes a lot of space. That's 25 videos that go up in a server, and it's 25 times the utilization of that server. And every time I make a video, that's what's happening. And when you have that kind of student base like I have, and in all those videos every single day, it is a huge resource to require to keep doing that. So I'm removing that. I'm keeping my word about not charging anymore. I was adamant about that. I don't want money coming to me in payments anymore. I don't want you burdened by having to pay me for anything. And you're still in this mentorship. I'm still teaching. I'm telling you to download the videos. Okay. I'm telling you to have them. June 1st, there will not be anything on any server that's hosted by me. Okay. I'm going to remove month 1, 2, and 3 on March 1st. That way it puts a fire under your tail and you download month 1, 2, and 3. Get it into your own hands, because I'm going to remove it physically from the server. That way you understand. And I'm going to do the same thing in March. When March ends and we go to April, I'm going to remove month 4, 5, and 6 from the server. So you download them. Start getting them done now. Don't procrastinate. Don't think I got plenty of time. Start doing it, because I'm not going to have your user groups videos. There's too many of them. I don't have a zip file. I'm not putting it on Google Drive. I'm not putting it in Telegram. I'm not putting it in anything else. It's your responsibility to download them. I'm giving you permission to take them while you have time to get them. And you got plenty of time. I don't even care how you get them. Okay? If you have an application that you want to go in and it takes all the links and downloads, there's people in the forum that are charter members. They're doing. I don't care. I don't care. I just want this part of the mentorship over, so that way we can be more relaxed and I can enjoy myself and not worry about the work side of all this. It's a lot of headache, and the problems with the servers we had in the back, the past couple of years. I don't want all that drama anymore. It's stressful. So like I said, I want this to be more enjoyable for me and you. And if I post things in a chart, if I post things in the forum, it's real quick and easy for me to do it. And it's easy for you to get the information and go right back into doing whatever you're doing, studying or your own personal life. Why wouldn't you want that? You'll still hear from me. I mean, I'm still going to be giving you content. I'm teaching you still. It's just I don't want to be doing all these videos. It's a lot of work. A lot of work. It takes so much time to produce the video, to edit the video, to do all these stupid watermarks on them, and then make renditions on. Yeah, it's dumb. It takes too much time. It's not productive. It's too much labor, too much work, and it's time consuming. And I want my time back. So you purchased access to me. You're in the mentorship. Ongoing, lifelong lessons. You will have teachings that go beyond what charter membership lessons are right now, including the algorithmic principles and theory that I'm going to be giving you when we get back into the swing of things in April 1st. Teaching is not over. The mentorship is not over. You have people email me saying, now the mentorship's over. It's not over. What are you talking about? Charter membership. That's what you're paying me for. You have complete direct link access to me in a forum where I will be able to engage with you. I'm not doing that in the public. You see me doing that with my YouTube channel? No. I'm not going back and forth and answering questions through those comments. You have direct access to me in this forum. That's where we're going to be going. Everything will be through the forum. Basically how it was when I first started with Baby Pips. Before I started doing videos. How I communicate and talk on there. Maybe that's not what you want. But it's going to be a lot easier once you get a taste of it. It's going to be a lot easier. I can take you right to the chart, type out the things. It's right and straight to the point. I don't have to go and do what I'm doing here. Folks that have taken the time and the initiative and exercised their own due diligence and downloaded the videos. And they're just downloading them now. Every time I make a new one, they're downloading. They're up to date. If the server crashed, they have everything. That's what I want. Because I will not be in a position to be able to give you, I don't even know how many videos there are. I have no idea how many videos there are. Okay, I've made so many of them. It's a lot. If you go through every section of the forum where there's core content and in the charter member areas, that's where all the videos are. There's no other videos. Okay, so every time you see a hyperlink, count that. That's the number of videos I have. And then times that by 25 user groups. And you can see quickly how fast this becomes a nightmare for me. And I'm not making it bigger by continuously making videos and videos. I don't need to do that. Okay, I just don't need to do it. And you don't need it. Like, you don't need it. I'm the teacher, and I can teach through a chart that's being posted on the forum that literally will take you minutes to upload into your study journal. You can take it right out of the forum and put it right in your study journal, and you have it. It's done. Like, that's easy. That's quick. It's efficient. And I can do that every single day, and it's not a big deal. It's not a big deal at all. But making these videos and editing and I'm tired, folks. I'm not going to lie to you. I'm tired. It's worn me out. And I don't want it to drain my interest in it because it can easily do that. And that's why I need the month of March off. Like, I need to recharge. Like, I need to take a step away from charts, people on YouTube, everyone here, no emails. The emails are probably going to blow up, that entire month. But I need to completely take myself away from all this and just be a family man for at least 4 weeks. And then I'll come back. I'll probably be so much better as your mentor because I've allowed myself rest, because these past 6 years have been a roller coaster. It's a lot of work running all this stuff. And you think it's easy. It's not. It's a lot of stress. It's a lot of things to worry about. Too many people's personalities, too many expectations that are not entitled to. And it's a lot of work. And I can't wait for the work part of it to be done. And then we can enjoy our company together. And I want to realize the whole purpose of why I created this community. And I want to be in the forum doing that. So hopefully this has sparked enough concern in you to start downloading them, okay, and getting it done. It does not take long to do it, but you have to be consistent about it. Every evening you can go in there and do an entire month of core content. You just right click on each individual link, save target as, and then put it into your directory that you're going to save as month 1 mentorship. Make sure all the commentaries, all of them, go into that area. And then once you're done that, you go back and you do the following day, go do another month. And in 12 days, you have all the core content. 12 days. then go in there and do the charter member. You can do that on a Saturday. There's not that many links right now. And you're up to date with the core content. Then start going into the commentaries. Do each one of the month's commentaries. That's where the majority of the videos are right now, because I'm doing, just about a daily video most times. Go in there and download them by month. And before, let's see, we're in February, March, April. The month of May, I'm hoping I'll have everything sorted for the videos that I don't make available right now. And there's no nefarious reason why. I have some of the videos, they were screwed up, and I had to try to find the raw video footage, because I have to go back in and redo some of those videos because they were corrupted. And I think it's the 2017 to 2018, there's a gap in commentaries. It's not that you're never going to get them. I'm not trying to keep them from you. It's just I lost that section of organization in all the user groups in the forum. So to make sure I'm not taking videos from one user group and putting it into another user group, because it's a lot of stuff. And this forum has become a spider web that it's a nightmare. And that's another reason why I want this to end. Like, I don't want the videos to be the source of ongoing learning. I want it to be forum based. So you'll have that in May. If I can get it done sooner, obviously I will do that. But I'm aiming for May. And that way, all those videos can be downloaded as well. It's not that many, because at that time I was only doing, I think, 2 or so a week. It wasn't that big of a deal. So it won't take you long to get those downloaded. But download them. Go get yourself a solid state hard drive, external hard drive. And I just bought another one as a backup. It was $220. And it was 2 terabyte solid state SanDisk, I think is what it was. Solid state external hard drive. Went right over to Best Buy, grabbed it, and there it was. And that's more than enough space to have everything in the mentorship and everything on my YouTube channel, and probably everything I'm going to be teaching over the course of this year on YouTube. And you'll have it. You'll have everything there, and then make it an investment. If you have children, for their birthday or whatever, you buy another external hard drive and just copy what you have on yours and put it on theirs, and then they have it. And it's it. It's done. And I think it's going to be it for today. So I'm looking forward to this weekend. I'm very, very tired. I did a lot of trading. I did a lot of teaching. I did a lot of lesson work. Did a lot of emails, responses. I've done a lot this week. I'm tired. So I'm going to enjoy my weekend, and I suggest you do the same. I will touch base with you on Monday. Until then, be safe.